equity markets have been on a tear, credit's been on a tear. What does risk appetite look like when it comes to M&A?
Well, first of all, thanks for having me today on the show, Guy, Sonali, and Alex. The rally has been very, very meaningful across equity markets and credit markets. There's no doubt. But there's still a very uncertain outlook. And it's the outlook which has caused M&A volumes to reduce very, very meaningfully at this moment in time. Having said that, the capital markets have really kicked in. And over the last 16 weeks, we've been on a real journey with our clients, starting off with bank-led liquidity as the US CP market started to slow down. That then fixed itself through liquidity, and the bond market really picked up both in the US and also across EMEA, and we've seen record volumes across debt capital markets. And then the equity recap wave has really started. The US equity volumes have been record-breaking. EMEA has been very much UK-focused in the beginning of this recap wave, particularly in small and mid-cap. I think continental Europe will see more equity activity headed into the summer and then post-summer. Mm-hmm. But M&A is where activity has lagged, and I think the animal spirits, as you pointed out, while you would expect them to be there, with equity markets and credit markets having rallied as much as they have. But it's the outlook and lack of certainty and threat of a second wave that's not allowed the M&A market to really kick in.
Phil, with that all said, Alex and I just a couple of weeks ago spoke to Richard Zogab, your colleague. He said that while debt issuance is at a record again for you guys, that it has to slow at some point. And that begs the question, when will we then start seeing distressed M&A as some of this dash for cash starts to slow down?
Yeah, there's no doubt when the markets are open and given the uncertain outlook, and given the tightening of credit, you would anticipate that corporates and sovereigns and supranationals would come to the market as they have. Now, if we see a more accelerated recovery, then they front-end loaded their capital needs, and that's the right advice. As it relates to M&A activity, there is a financing market, so not COVID-related. Citi led the Telefonica Liberty tie-up in the UK, so where good stories, good value creation, good synergies can be represented, deals can certainly get done. And we certainly do anticipate a pickup in activity in M&A as we get into the second half of this year. But really, it'll be 2021 when we start to see distress through asset sales, or we start to see growth combinations in the sectors that have really been working through COVID, healthcare, and also technology.
Phil, that's a great outlook for the end of the year. I want to talk about something that's happening right now as well. That's deals dying. There's a lot of tension in the market right now about buyers looking to get out of certain assets. We know that Citigroup, for example, is on Tiffany's LVMH. What is your outlook for more acquirers trying to get out of the deals that have been really impacted by this COVID pandemic?
Well, look, I think that, again, you point to the overall outlook. There's a lot of speculation, by the way, around deals. Not all of it is well grounded in the facts. I think whenever you have an uncertain period of time and you've got deals that have been consummated and are yet to close, you do hear speculation. It's not all factually correct. But having said that, there's no doubt that deals have been either stalled or deals have not been consummated because of the uncertain outlook. And we're tracking, a similar level in terms of deals not consummating as we did coming out of the global financial crisis. What's going to fix that? Well, it's going to be just a greater sense in terms of corporate outlook. and certainly in terms of earnings predictability to back the rise that we've seen in the equity markets and to underpin these very high multiples that we're trading at right now that are disconnected to the lack of fundamental earnings outlook.
So if you tie that all together, and let's bring in a few other things that aren't necessarily COVID related, and one is now the tension between the EU and China over M&A takeovers. The other is the US and the EU when it comes to this digital tax. You're still dealing with Brexit. There's still all these sort of protectionist rhetoric anywhere you look. What does that do for the psychology of someone in the C-suite who's wanting to expand their business?
Yeah, there's a lot of talk about, we're going to see a pickup in cross-border activity. Cross-border activity has been very slow year to date. There's also been a lot of chatter about Chinese intentions. And given the tension that we've seen escalate on the heels of COVID between the US and China, there is more discussion here in Europe about whether we're going to have more inbound from China. I think that is logical, but at the same time, you're right in pointing out the more nationalistic intent around critical industries within Europe and the actions that the EU has put into place around protecting those critical industries. I think that can be expected, especially in the more distressed sectors when those sectors are receiving state aid. I think it's natural that you will see protectionist activity to prevent cross-border, particularly in those companies which are receiving state aid.